All right, Carl, thanks very much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, the market's under pressure today. Global bond yields, they are rallying. The future of the Trump tariffs in doubt. And following that court ruling, we're trading all of it with the investment committee. On the case today is Josh Brown, Joe Terranova, Jenny Harrington, Jason Snipe. We'll show you the markets. We're basically at the lows of the session, as you see the declines there. And to no secret today, the NASDAQ is leading it. If you look at almost a 2% decline. By the way, this is the first back-to-back 1% declines for the NASDAQ since that so-called Liberation Day. So it's been a minute. Been a minute since, Joe, we've seen a tech sell-off like we have the last couple of days. Yields are surging everywhere.
They are.
And it's not just touching 5% on the 30-year here.
Yes.
Boons, gilts, almost everywhere you look. France. That is a significant story today.
I think that was the big story overnight. You had the UK gilt 30-year touching 5.72. That's the highest level in 27 years. So we've always said the question was, when you're looking at the three major balance sheets, consumer, corporate, and government, which one has the most stress on it? And right now we're seeing a reacceleration of the stress on the governmental balance sheet. What that means for the equity markets is the most loved areas of the market, the areas of the market where momentum has been the catalyst, where bullish people like myself have advocated for owning, those areas of the market you're going to see working off some of the overbought conditions, some of the extreme sentiment, the bullishness surrounding it, and that takes you directly towards technology. You had the NVIDIA earnings the other day. Post NVIDIA's earnings, you've seen a little bit of a reversal, and it really is technology that's being targeted right now in this mild correction.
Yeah, more than a little bit of a reversal, right? I mean, NVIDIA has not traded well at all since its earnings release, and the selling feels like it's accelerated a little bit. There's what looks to me like an intraday. If you take, there's the 1 week. I mean, it's basically a flat line and then the boom. So we'll continue to follow that, but it really is an AI-related sell-off today, Josh. If almost everywhere you look in that space, that's where the most amount of pressure is as you come into September. Are you talking about a CapEx bubble like Sam Altman warned about? Are you talking about a return on investment from all of the CapEx that continues to escalate? Are you talking about stretched valuations? Are you talking about China competition? The Alibaba news wasn't good for the chip stocks last week. And there is follow-through, it appears today, on all of those fronts.
Yeah, I think that's right. Sometimes it's not as simple as trying to figure out who committed the murder in the Clue mansion, and we're looking for one specific person holding the candlestick, et cetera. Sometimes it's just an accumulation of things that make people say, you know what, I own a lot of this, maybe I don't need to own as much. I also think, like, you're post-catalyst. So I know Broadcom's going to report, and that's obviously a catalyst, but like the NVIDIA thing is the thing. So for this theme, if you held through earnings season, you made a lot of money. If you've been in these stocks since the lows in April, you made a lot of money. I mean, these stocks went absolutely crazy to the upside. And so now that that catalyst is behind you, it's like, all right, I'll add all the things that you just said, Judge, and then I'll layer on top of it seasonality.
Hey, can I add,
and then I'll layer on top.
Can I add one thing real quick? I don't mean to interrupt you, but
yeah, please.
There's a story that just drops from the Wall Street Journal and like literally falls in our lap in this conversation. Anthropic completes new funding round at $183 billion valuation. I bring it up.
Right.
They finalized $3.5 billion at a $61.5 billion valuation. So they completed the round at $183 billion valuation. It just goes to exactly what we're talking about. Big numbers, spending, valuations, expectations, and whether, even with all of the legitimacy around the hype, whether all of these numbers can pay off.
Yeah, no, I think all of these things can be true. You can still be bullish on the theme between now and the end of the decade, which I certainly am. But you have to say to yourself, like, all right, I'm not the only person that gets it. Everyone understands that. There's a lot of money already invested in this space. Valuations are not low. Expectations are pretty high. And they've just gone on a huge run. But there's an underappreciated thing happening on a parallel track that I think is worth bringing up, which is there's a ton of money being made away from AI. International small value, U.S. small value, both outperforming the S&P this year. The banks are going absolutely nuts. I have 39 banks on my best stocks in the market list right now, which I think is the 39 financials, I should say. Seven of them are banks. Historically, this year, it's been mostly capital markets related stocks, and now it's banks themselves. There are a lot of new stocks that people haven't looked at in a while. So the biotech starting to get going. The XBI looks pretty good. So I think there's choice. And so you might have somebody that says, well, you know what? I just rode NVIDIA up from 150 to 180. Maybe I take a little bit off and I look at some of this rotation into other sectors that I've been ignoring up until now. So I don't think it's an emergency, Judge. I just think it's people doing a combination of profit taking, recognizing that valuations and expectations are high, and getting excited by other areas of the market that are working. And it's been a while.
Yeah, it has. So Jenny, we obviously are on a weak hand here as we enter September. I mean, how are you thinking about everything in the context of the tariffs, the areas that have led? There's more scrutiny over the AI trade. Industrials are weak today. Financials are weaker today. These are the winning sectors.
Yep. So I think a lot of, when you say, how are you thinking about it, right? Really, to me, the theme that keeps popping back into my head is manage your expectations. We need to remember that last year the market was up 25%. It was up 26% the year before that. We're still up almost 10% this year. If we were to end 2025 up 8% or up 7%, I would consider that a massive win. So let's not get too hyped up over this pullback. But at the same time, I think you need to be really serious about rotation. I was just looking at this thing that's a list of the top performing stocks year to date, and it feeds into exactly what Josh was saying. Palantir, okay, that's the only one that kind of fits that AI-ish theme. Newmont, Seagate, GE Vernova, Western Dig, CVS Health, GE Aerospace, NGE. Those are the stocks that are up the most this year. Those things are all up 50, 60, 70% on the year. So there's this definite rotation. And then I found this morning interesting. I read a bunch in the morning, and there's definitely negativity moving in on the AI theme. So I don't know if anyone's heard this term. I just heard it this morning. It's called clanker. And clanker has become a go-to slur against AI on social media. And it's talking about how people are starting to revolt on it, saying hey, don't take our jobs. Hey, that looks really fake. That music's terrible. That image isn't great. And so there's that revolt. And then at the same time, there was another article out this morning saying China's pursuing a more practical and potentially cheaper AI strategy. So that, I would argue, would continue to take the wind out of some of the AI leadership that's out there, just in terms of valuation that we've seen. So I think the market could still end up fine this year, but you should consider rotation. You should manage your expectations. When we talk about what's the next leg up, I don't see how we go from up 10% on the year now to up 20%. I think if we just manage our expectations and say, look, if we end up 6% or up 12%, that would be just fine. So I'm not really fiery on the subject for a change.
So on the issue of bond yields, which need to be closely watched.
Yeah.
Ed Yardeni today talks about the bond vigilantes might start acting up again if they can no longer look forward to a significant reduction in the federal deficit attributable to tariff revenues, right? It sort of hangs in the balance for the moment. I mean, the tariffs are staying in place until the legal system has its final judgment day on all of that. As long as we're talking about yields rising, it's going to be hard to talk about stocks rising as well, isn't it?
There's no doubt about it. I mean, there's a reasonable alternative, right? Obviously, if the 30-year trading at close to 5%, the 10-year jumping pretty dramatically, and then this concern around tariffs and how this story is going to play out. $90 billion potentially as a tariff refund. You're talking about a lot of these dollars being able to pay down the deficit that we have. So there's definitely some concern. And then obviously the AI thing that we've been talking about, where there's digestion, there's a lot of hype, a lot of CapEx talk that we've heard through earnings, and looking at other sectors as Josh described and Jenny described, and other names that have done well. So I think you put that in the crock pot, and I think that's what is kind of driving us down a little bit. And, it's a turn of the new month, right? Seasonality is a real thing. whether we believe it or you subscribe to it or not, September is traditionally the worst month in the market.
I get that. And by the way, there are people talking about that too today, in which some are suggesting, don't fear September. Why? Because earnings have been great. The momentum's going to continue there. Rate cuts are coming, probably in September. Market's betting big on that. After that, who knows? Some of these AI adjacent names or AI pure names, the power names over the last month are down a bunch. Vertiv, Vernova, Constellation Vistra, Eaton. Certain areas that play in the industrials are down. We mentioned what's happening in financials too. We'll get back to that also in a minute. The chips are being scrutinized, I think, Josh, in a way that it's like if you're in the AI space, by and large, you're good. If you're not like right in the ball game, maybe you're not so good. Chip equipment names have been scrutinized. Lam Research downgraded to underweight. That was at Morgan Stanley today. You sold Lam Research. Why'd you do that?
Well, that was a stop. So that was a name on my best stocks in the market, but then they reported earnings and the stock sold off. And I tried to use the weakness as an entry. The stock went up initially, rolled my stop up, but then I didn't end up making any money. That's a trade. I think the main event for the chips sector is to have Broadcom come out on Thursday and basically reiterate everything that NVIDIA just said about the demand picture. So just to give people a quick idea, the revenue expectation for Broadcom is $15.8 billion. So that would be a 21% year-over-year increase. On earnings per share, they're looking for a 34% year-over-year increase. This is important. Broadcom is the 7th largest company in the S&P 500 right now. It's another $1 trillion+ market cap company. And again, they have to give you, I don't think they have to come out and say 3 to 4 trillion in CapEx the way NVIDIA's CFO did, but they have to at least ratify the health of demand for chips. And they're not head-to-head in the same chips, but it's all part of this big AI theme. I think on the equipment side, Judge, so Lam Research, Applied Materials, and KLA are the 3 big names there. I mean, these stocks are high beta names. I still like Lam a lot fundamentally. Technically, I have to wait for it to set up. I like that the best of the 3. But in the end, they're still cyclical. As excited as we all are about this secular AI once-in-a-lifetime build-out story, chip equipment is, any capital equipment, it's always going to be cyclical. And I think a lot of people that are in these names, they've had huge gains, and now they're worried about, are we seeing the peak of the cycle? And I'll leave that to the semiconductor analysts to decide. I won't be the one that sees that coming, which is why when I'm involved in these names, I'm typically using stop losses.
Yeah. CNBC Pro today, by the way, if you look at how people are positioned or the stocks that are most in favor as we head into the fall, thought had a really good read. I encourage you to check it out. And if you're not a member yet, think about it. The most loved stocks among the retail community heading into September, no surprise, I think, from the top 2, NVIDIA and Palantir. Big net orders from the retail cohort. Interesting, Walmart on the list. So there's AI and then not necessarily pure. Walmart, CoreWeave, Snowflake, AMD, Robinhood's going to surprise nobody by being on the list. SoundHound AI, Hims and Hers as well. You have some play around this way.
I do. Look, it just speaks to the nature of active trading and how it's intensified over the last several years. And active trading is looking purely at stocks that are going from the lower left to the upper right. You're not going to see names on this list like Merck or Pfizer or names that are struggling like a Lululemon. These are stocks where people are looking at them and saying, okay, I can get rewarded quickly. A lot of these stocks, they have fundamental justification behind their appreciation. Some of these stocks, maybe you could call into question and be a little bit skeptical about that fundamental representation. But that's really what this is. It's momentum in its purest form, and it is a grand part of the marketplace.
Well, industrials have had a lot of momentum, but not so much as we start September. Jenny, Carrier, Stanley Black & Decker, UPS. I mentioned if you can easily draw a line from the AI industrial type names like you mentioned GE Vernova.
Yeah.
Some are utilities, some are considered industrials like that one. But then there is, I mean, the ISMs, manufacturing ISMs were weaker than expectations today. Carrier, Stanley Black & Decker, UPS, 3M, Honeywell, rails and truckers are all having a tough session.
I think the problem with particularly the UPS, Carrier, Stanley Black & Decker, with those, the problem is that the tariff noise has overwhelmed whatever else is going on. And things like for UPS, you know, what the de minimis packaging pricing is, and for Stanley, what tariffs really are going to be. Everything else is eclipsed by tariff noise, and that's what one of the problems with what's going on today is. It just adds in uncertainty. And so as an investor, it's very hard to make decisions when a huge part of the business is going to be impacted by that. And by the way, for the management teams, it's very hard too. So I think that's the real story here. It's less kind of bigger economic.
What do you think?
Yeah, no, I think you know, as it relates to the theme and the de minimis story, I think is a big story, right? Because I think, you know, you don't think about pricing power and the cost to the consumer. The consumer has held up relatively well thus far, you know, so I think that's a big story, especially for the industrial names and obviously the transport names, right? You know, as it relates to some of what Joe was saying about some of the software names, and I think about a Snowflake being on that list. You know, Snowflake, when I think about AI themes, data warehousing, which we were talking about last week, is so important. That serves as a chassis for information. This is what the large language models are built off of. So you cannot buy indiscriminately in this space. I think you have to really be you know, look at names and understand the fundamental stories, as Joe said, but you know, you can't just buy them all, obviously.
Let's spend another minute, Josh. I don't want to sort of gloss over your best stocks in the market list. With it, by the way, another CNBC Pro edition of late. Because what's interesting to me is the reason why we moved it up into our A block is, number one, financials have been trading so well, but that you make the declaration that it's the smaller banks that are actually breaking out. You like one chart especially, but can you give us a little bit more on that theme?
Yes, absolutely. As I mentioned, financials have been leading the best stocks in the market list by volume pretty much all year. But a lot of them have been, you know, asset managers, broker dealers, insurance. Now we're starting to see actual banks, and not just JP Morgan, Citi, and Bank of America, which are on the list, and we've talked about them. But now I got big regionals. I got PNC, I got Truist, and I have Huntington Bank, which is the one I wrote up today. So the Journal had a story over the weekend talking about the fact that with mortgage rates down 9 out of the last 12 weeks, there are currently 2 million homeowners who could save money if they refinance. That's up from 1.7 million homeowners as of the end of July. So with every passing month, mortgage rates are ticking down slowly, but it's happening. If we get down to 6%, there would be 6 million people in the United States who it would make sense for to go refinance their mortgage. It would have to be 0.75 percentage points below where their mortgage was struck. That's like the magic number for when people say, hey, wait a minute, I'm paying too much interest on my mortgage. So that's a very powerful catalyst for the regional bank stocks, Judge. And mortgage refinance activity is only the tip of the iceberg. So the capital market stocks have already benefited from the bull market. And now if you start to get even 1 or 2 rate cuts, mortgage rates continue to come down, you're going to see this boom in demand for loans. You're going to see refinance activity. You're going to see existing home sales pick up. Huntington Bank, if you want to pull this chart up while I'm talking, this is a no-brainer to me. I'm not in the stock yet, but I may be at some point. I don't believe in triple tops. So what you can clearly see is this stock hitting its head against the same level. This is now the 3rd time it's trying this high 17s, low 18s resistance. I think she breaks through this time. A lot of these regionals have the same kind of inverse head and shoulders, which if you squint at what's on screen, you can see for yourself. And they're all in golden crosses, and many of them are making new highs, which HBAN recently did. If you pull that chart back longer, you can see there's a lot of room. So what we're saying here, traders can use 1550 to 16 as their risk management, as their line in the sand with a stop. I think longer-term investors just swim naked. Don't even bother. The 13 PE ratio, 3.5% yield. I think you've got that cushion. Your risk in the stock is recession, but guess what? That's your risk in every other stock. So this is an example of an area of the market we were talking about. I'm not suggesting people are selling NVIDIA and buying Huntington Bank. I'm just saying there are other parties going on, not just the one party. And that's what's notably changed in the market, I think, over the course of the summer.
Track this market over the final stretch today with Adam Parker, Chris Verone, Cameron Dawson. Mark Short's going to join us as well to talk about what he thinks ultimately happens with the Trump tariff. So I'll see you then, 3 o'clock Eastern time. Got about 45 seconds or less. Josh, final trades what?
Netflix, 32 times earnings, 32% growth expected.
Thank you. Jason Snipe.
Amazon, I know there's been some concerns on AWS. I think they'll reaccelerate here.
Down 2%. I mean, it's traded better than many of the other of the mega caps, but not by much at this point.
Yeah.
MPLXLP.
Yes, an old school.
I look right at Jenny Harrington with
Old
that one. I
school
knew
MLP.
it. I knew it.
Yeah, who would do that one? So it's got a K1, but it's got a 7.5% yield, and I think it's out of the fray of tariffs and interest rates right now.
All right, Joe T.
The refiner trade is breaking out. Valero.
Reasonably reasoned by. All right, I'll see you on the bell.
Hey, I'm George. This is Blue Cloud Trading. It's Tuesday, September 2nd, and it's 5:24 p.m. currently. As I'm recording this video, it's after the market closed, and you can see the indexes here that were down, all down today. We're going to talk about that. We're going to look at the heat map. That's really important. We're going to look at the stocks, the individual stocks, and how they performed today. We're going to look at the stocks that were discussed on the halftime report. Not all of them, but we're talking about 19. That's quite a few. And what I've done is I've labeled them with a little blue flag if they are technically looking really strong. So we're going to look at the technicals using the Ichimoku indicator. We're going to look at the index ETFs as well, some of the Mag 7 stocks, including NVIDIA, the sectors, and a couple of our requests from our members. So let's get started, folks. We're going to first take a look and see what happened here with the Dow, which was actually down 0.55%. You can see a gap down in the morning. Okay, we did start creating a higher lows, which is good. All right, that did occur, and then we also broke that high right there towards the end of the day, so that's also bullish. Same sort of scenario happened here. It did not actually break that level on the Nasdaq. The Nasdaq was down 0.82%, but it did gap down and stayed under Friday's closing price. Same thing with the S&P 500. Okay, actually the S&P 500 looks like it broke through that little that prior high there, and this one. So that is bullish going into tomorrow. We'll see if that turns into anything. The Russell 2000 was down 0.54%. That one did not break the prior high, so that's interesting. Let's take a look at the heat map. What we're looking at here are the individual stocks within the S&P 500, and what you'll notice is NVIDIA was down 1.95%. Apple down 1%, Amazon down 1.6%, Tesla was down 1.35%, Google and Meta were down slightly there, but the healthcare stocks did well. The energy stocks did well, and so did some of the consumer defensive stocks, like Walmart was up 0.9%. Broadcom was up 0.29%. Now Broadcom's coming out with earnings soon, so we're going to be watching that. I think it's on September 4th, if I'm correct. Financials were down too today, so not good. How about the groups, which is the individual sectors? Let's take a look at those. So you can see that healthcare and energy were the only two, all right, that were actually up, but just slightly. And then real estate took a deep drop there, down 1.54%. Technology down 1.08%. And then industrials was the third sector that was also down. All right, and then if we look again at the 1 week performance, energy is at the top and utilities is at the bottom. All right, so let's start off with the index ETFs, and then we'll get into all those other ones there as well. And here we are with the Dow Jones, the DIA ETF, which represents the Dow Jones Industrial Average, and it's a way to invest in the stocks that fall into that. Now, if you guys aren't familiar with this software that I'm using. It's called TC2000. You can actually pop open the component watch list by the right next to the ticker symbol here. There's a little, see that? Open component watch list. Bam, it shows all the stocks that are within the Dow. All right, there's 30 stocks in there. And the Dow overall looking pretty strong. It's actually looking stronger than the SPY and the Qs actually right now. Even though it was down 0.54% today, it's holding up above the 451.34 level. Why is that an important level? Because it's basically, we took out these highs right here. All right, that's a weekly level that's been taken out. Actually, a daily level, sorry. These are based on going all the way back to December 4th of 2024. So do you see how we basically found resistance there, found resistance, dropped, came here, all right, a couple times and dropped each time. And then we finally had the breakout. All right, that occurred on, let's see, what day was that? That was on August 22nd, Friday of August 22nd. And you can see that it's holding up now. So it came down, it's retesting it. That's a good sign that it actually held up. Higher probability that's going to bounce here. How about the Russell? Same situation. The Russell actually broke through on the exact same day, Friday, August 22nd. So there's a little bit of a shift taking place. I think money's coming out of the SPY and the Qs maybe, and going into the Dow and the Russell. I mean, at least for the short term. Now, I'm not saying this is going to be a long-term situation, but the SPY, for example, is currently under the green line, which is the 9-period moving average for the Ichimoku indicator. It actually takes the highs, lows, divides that by 2 for the last 9 periods, and that's how it's projected. That's why sometimes it will actually flatten out. Same thing with the Kijinsen. So it's a different way of looking at moving averages. Most moving averages look at the closing price. This takes the midpoint of each candle. So it's a better assessment of the average, okay, of how price is moving. And but it's still holding up above the 26. That's the red line right there. And everything here looks pretty bullish on the daily, except for the fact that on today, I mean, we basically gapped down, right? There was a big gap that occurred today, this morning. So there was the closing price on Friday, gapped down and stayed under. It did show a little bit of strength towards the end of the day, but it did stay under the Tenkan-sen. The QQQ ETF did the same exact thing. All right, so it had a nice little gap down, all right, from Friday, and then started a little bit of buying happen. And you can see that buying taking place if we switch it to a 5-minute chart. So here we are on September 2nd. There's the gap down. Okay, we could see that towards the end of the day, things started to improve at least. And we even got on the 5-minute chart above the Ichimoku cloud, which is a bullish sign. Okay. I can't tell you what it's going to look like tomorrow, but it's looking more bullish. All right. Towards the end of the day. Now the VIX actually had a bit of a spike. If we look at the daily charts here, this represents the volatility and fear in the markets. That actually popped 11.78%. That's a pretty big jump, actually. It entered the Ichimoku cloud, but then, as you can see, it kind of deflated. It touched the 200-day moving average, that dotted yellow line that you see right there. Okay, and then what happened? It just dropped, creating a shooting star type candle. So, you know, it's a mixed bag here. What I am concerned about is the fact that the VIX is, if we look at the directional movement index here, the ADX, the white line that you see right there, which represents momentum, is going up. That's increasing. So momentum is increasing. Volatility is increasing. The green line is above the red line. That's not good. That's not conducive to a strong market generally. And we were around, last week we were around the 15 level. Now we're at 17.17. We're nowhere close to where we were back in April. All right. Do you remember that big spike that occurred when we basically gapped up to this level here around 26, and then it reached as high as 60 before dropping. But this is not something that we should discount completely. We should pay attention to it. FEZ. Maybe it's time to slowly, wait and see. Take a more wait and see approach. Not be as bullish in this particular moment. As we see the VIX rising. The Euro stocks also kind of disappointing because instead of bouncing off the cloud as it typically does most times, right, find support, it actually gapped down, right? Today it was down 1.12%, and found resistance at the cloud. So that's not good. And if you look down below, the negative DI now is above the positive DI. That's also negative. Okay, and ADX is moving slightly up. So I would be very cautious here. Be very careful, and at least for the short term, you can see it's turning over, obviously. All right, next, let's take a look at the stocks that they talked about. Not all of them, like I said. We're going to talk about 19 stocks and ETFs. VLO, Valero Energy. That was Joe Terranova final trade. And if we look at the weekly chart, it's pretty bullish, right? Last week, actually on Friday, it closed above the Ichimoku cloud. It's continuing to move up. Here it is in the daily chart. Stalling, though, at the 155.12 level, that prior high from July 10th of 2025. So I would not be adding a position here. Why? Because we are so close to resistance. We are, it's 154.28. There's 155.12. You want to wait to break through that level. After that, it's a different story. Maybe then it can move up to the next level of resistance, 167.78. It's a weekly level. We'd have to go back in time over here. Do you see that candle? That's from August 2nd of 2024. So that's 2 years ago, folks. 2 years ago that we're coming back to those price levels. If we get there, all right. If we can break that 155.12 level, and then we're talking about a good potential move of about 8.2%. And if it can break through that level, maybe as high as the prior highs of 185, so that could be a 16.8% move. Yeah, those are the all-time highs. The all-time highs took place back in 2024. You can see that decline that occurred, right? And now we've broken that trend line, and now we are establishing a uptrend. Obviously, there's a uptrending parallel. You can see that channel. All right, that bullish channel. PNC is the next one we're going to look at. PNC Financial. This one also looks pretty good. Here it is on the weekly chart. One of Josh Brown's best stocks. Okay, that's one of the stocks he talked about. Here it is on the weekly. Looks good on the daily as well. I like it. In fact, I can see what's happened here. We had a inverse head and shoulders pattern. Actually, you can see it even clearer, I think, on the weekly chart, maybe. Yeah. No, we'll use the daily. Here's the head. Inverse head and shoulders. So there's the head. It's upside down. There's the shoulder. There's the other shoulder. There's the neckline that was broken. And you can see that we moved up, came back, retested that level where it broke, and then it expanded to the upside. So that's very bullish for PNC. I'll show you guys what that looks like on the cheat sheet that we have right here. That's this particular pattern right here, the inverse head and shoulders. After a drop, okay, we create the first low, comes up to this level, drops below the prior low, creating the head, comes up to that same level of resistance, creates another shoulder, basically, essentially a higher low from the prior one. And then once we break that neckline, they call that the neckline right there. And if it can retest it and then succeed and bounce off of it, then it's very bullish. Okay. The opposite of that would be the bearish version of that, which is when you have price move up, create the shoulder there, drop, create the head up at the top, then there's the other shoulder, and then it breaks through the neckline there. That's bearish, but we've got the bullish version right there, and it's continuing. What about KRE? Here's another bullish inverse head and shoulders. In fact, this one I brought up on the show. If you look at when I created that, it was back in July. I basically noticed it in July and drew this, the head, the shoulders right there. There's a neckline. It broke through it. As you can see, it came up to that level, dropped, retested the neckline, bounced, and now it's continuing its move up. So I do like the KRE, but it is stalling at 65.57 based on those prior highs from February of this year. All right, so something to consider. It did break through it briefly right there on that day on August 27th, but it wasn't a really conclusive break. You can see that we had a wick on the top there, and then it sort of turned over. Snowflake, down 2.12% today. It had a big jump on Thursday of August 28th with the earnings announcement, but now it's losing some of that steam. Maybe there's some money coming out, profit taking is taking place. It may just drop a little bit more, find some support, and then pop again. We'll see. But right now, I would not be adding positions here personally. SWK, Stanley Black and Decker. You can see that it was finding a lot of resistance around the 200-day, right in that zone there. Could not get through that level, and then it gapped down 3.46%. No on SWK. UPS does not look that great on this daily chart. I mean, this was Jenny's final trade back on January 31st. So let's see, where was January 31st? Right around this candle is when she talked about it. She was recommending this on January 31st. I'm sure that I didn't say good things about it, obviously, because it was under the Ichimoku cloud. And one of the rules of Ichimoku, you don't add long positions when price is under. Yes, you might think in your mind, like, hey, this is really cheap. I should buy this. It's dropped so much in price, right? I mean, look, folks, if we go back in time from 2022, it was at a $237 stock. I get it. And it's dropped quite a bit. And so what happens is the fundamentals start to look really attractive. Like the price of sales is under 1. The peg looks nice, You see all these positive things in the fundamentals, and you can easily fall into that trap, which is why what I suggest is, okay, look at the fundamentals, but also take a look at the technicals. There's nothing wrong with looking at the technicals to see if there is, in fact, a little bit of a momentum, behind this. Are there other participants that are helping to push the price up? In this case, no. The answer is absolutely not. If you look at the weekly chart, in fact, it's been under the Ichimoku cloud. Let's go back to this. Do you see it right there? We're talking about 2022. Since 2022, it's down 55.12%. All right, it's a perfect example of how this indicator can help you. This is what I specialize in. Consider becoming a member. You can learn a lot more about Ichimoku in my videos that I do each weekend. Members only video. I did one this weekend. It was over an hour long. And at the end of this video, there'll be some information on how you can become a member. Okay. I also provide 20 new stock ideas every weekend for the upcoming week. I added one of those stocks that I recommended this weekend in my portfolio. I share that with legend level members. So, just consider that if you're interested in learning about that stuff. It can help your portfolio. I think, we've got a lot of members that are doing well, and anyway, let's get into this. So UPS, I would strongly advise against this one. Okay, let's go to Merck. All right, now Merck is a different story, and the only reason I say that is because, yes, similar to UPS, look at that long downtrend. Okay, under the Ichimoku cloud on the daily chart for a very, very long time. But what's starting to happen now is it's emerging. It's emerging, right? It's breaking through. You can actually see, it broke through over here. It came, basically it's built this like sort of consolidation area, right? We took out this high over here. The only problem with it is that 200-day is lurking right there, and you can see how it found resistance at it and then dropped again. But it found support at the Kijinsen. There's support at the cloud. If it can break the 200 and break above this high here, I think Merck has potential. The only question is, what does it also look like on the weekly? Because personally, I don't recommend or add positions to any stock if I don't have confirmation on both the weekly and the daily time frame. And I'm going to guess, because this thing has been in the downtrend for a long time, that the weekly chart needs a lot of work. So let's take a look at that one. I am correct. All right. So as you can see, because we've been in this decline for so long, it's sort of like embedded in this like negative energy. Okay. It's been under there for so long. And as long as it remains under the cloud on the weekly, I personally wouldn't be adding this position. If you are more of an active trader, and let's say that you're like, okay, I want to like sort of maybe I want to be in and out of this stock. That's a different story. You could consider day trading a stock like this. All right. You could use the daily chart and maybe the 30-minute. Okay. You can see that little prior uptrend right there. That was like a brief 6% move. Okay. Maybe you use, yeah. This is not really a day tradable stock per se because the beta is 0.40. Generally, you want to day trade stocks that have a higher beta, usually around 2 or more. If you're day trading, okay, on a short time frame like a 3-minute, 5-minute chart, 1-minute chart, I wouldn't day trade this one. So I would just skip this altogether. I would just like not be thinking about this one at this point. Anyway, that's just my input. But let's take a look at Lululemon. That's the next one. Also in a decline, also under the Ichimoku cloud. So I'd skip that one. Here it is on the weekly chart, also under the cloud. MPLX, on the other hand, that was Jenny Harrington's final trade today. On the weekly chart, it is above the cloud. It looks like it's under the 9 period, so I had to hold off until that confirms a breakout above that 9 period. And you can see here that it's not something that I would be personally interested in because you can see that it's stuck in this little consolidation area, right? And the cloud is bearish. We got single span A is under single span B. There's a lot of negative things happening here. The faster moving average is under the slower one. The green line is under the red line there. So no on MPLX. How about Walmart? Walmart on the daily, you can see it did find some support around this area here and the 200, but the faster moving average is under the slower. So I'd hold off on that. Here it is on the weekly. Yeah, it needs to strengthen a little bit more. SMH also has pulled back a little bit. We've got a lower high here than the prior one. You can see that little decline right there. So no on SMH for now. Here it is on the weekly chart. It basically closed. I'm sorry, I take that back. It has not closed on the weekly chart under the Tenkan-sen yet. This candle is still forming. So maybe Broadcom will help to push price back above the Tenkan-sen by the end of this week. We'll see if I'm correct. And there's Broadcom. Now I closed my position on August 29th. Let me show you guys that on the daily chart. As you can see there. So, and I explained why I closed out of it in the members only video. So you may want to check that out. LRCX, Josh Brown closed his position in this stock. He talked about that on the show today. I think it was a wise decision based on what we're seeing here. We do have a lower high here from the prior high. So technically starting to show some weakness there a little bit. If we look at the weekly chart though, it's still above the Ichimoku cloud. You know, it could certainly bounce here. There's possibilities for this, but you know, if he's looking to add other positions that might be showing more strength, that makes sense too. PLTR is another stock that I've held multiple times this year and in 2024 with some nice returns in the past. Right now, I do not have a position in it. The last time I held it was back here on August 5th. It did move up slightly, then it dropped. And so it's under the price where I got out, so I feel good about that. It looks like it's finding some support, though, at the cloud right now. So Palantir is starting to show a little bit of strength. But, again, under the 26 period, faster moving average under the slower one, I would hold off on this one. If you look at the weekly chart, it does look like it's about to pop back above. XLI is it's an ETF they talked about, industrials. On the weekly chart, it's currently under the Tenkan-sen. On the daily, it's also under the moving averages, but it looks like it might bounce off the cloud. See how it stalled right there after the pullback? What about RSP? Same thing. It's pulled back, but showing a little strength here with what they call a spinning top, but I would not be adding. Okay, that's why these are not flagged. XBI looks good on the daily chart. Big volume bar. That's the biotech ETF. In fact, today it broke this level right here, these prior highs. So that's very bullish, right? But if we look at the weekly chart, we're stalling right at the cloud itself, at the top of the cloud. So I'd hold off on this one. And the future cloud, as you can see here, also looks bearish. You get the Senkou Span A The light colored blue line is under the Senkou span B. That's bearish. There's a twist that took place right there. So, but it's looking pretty bullish. I mean, these last I don't know, I guess what was it, 2 months, 3 months or whatever, it's been moving up. That almost kind of looks a little bit like a very negative. Yeah, hold on. This looks like a negative wedge type pattern. Let me show you guys that pattern, because if it breaks under that, that could be really bearish. Let me show you the wedge. A bearish wedge. There it is, right here. The rising wedge, which is neutral or bearish only. What I just showed you, right? That triangle. So that can be very bearish. So I'd be careful about that one. All right, about that particular XBI. We need to see some more bullishness in this one. All right. How about AMAT? That's also under the clouds. Stay out of that one on the weekly and on the daily. It's Applied Materials. Baba, Alibaba, technically on the weekly chart. All right, we've got the Tenkan, the faster moving average, under the slower one. So no on Alibaba, at least for now. On the daily chart, it is looking more bullish. You can see that volume that came in on Friday, and now we've got now we have a continuation today on Tuesday. Alrighty, so those are the stocks they talked about. Let's go into the rest of some of these Mag 7 stocks like Tesla. Here it is on the daily chart, pulling back under the 200-day, under the Tenkan. It did create a spinning top. We might get a bounce here. Here's the weekly chart. It's inside the cloud though. Apple. So that's a no-go for me. Apple is inside the cloud too. That's also a no-go on the weekly. On the daily, it's holding up above Tenkan. Meta on the daily is under the moving averages. On the weekly, also under the Tenkan. So no on Meta. Let's look at NVIDIA. NVIDIA's a stock that I've held a few times this year. And right now, so I had my last position here was I added on June 26th. I closed it on August 19th for a 15.5% profit. I added it again on August 22nd and then got out on August 29th after the earnings announcement. I was hoping that we would see a pop like most people. We didn't get that. We got the opposite effect. And so I closed out for a flat trade. Now, and I shared that in the members only video. Right now, we are starting to see a little bit of potential with this spinning top. It could bounce if it gets a little closer to the cloud, but I would not be adding positions here based on that. You can see that the ADX is moving up, negative DI is also moving up, and the positive DI is moving down. We've got all this volume, this negative volume that's above the 50-day moving average. So that's not good. It seems like there's a bit of selling that started taking place from starting with that candle right there. Okay, sectors. Let's take a look at the strongest ones and not the weakest right now. XLB, materials. Okay, on the daily chart is holding up above Tenkan, the Kijun, and the cloud. Looks good. The only negative thing here is the Chiku span. See that white line? That's today's closing price projected 26 periods ago. And that is not above the candle 26 periods ago. Therefore, that's the one weak spot of the materials XLB ETF. Otherwise, I do like it. If you look at the weekly chart, it is above. Okay. Price is above the cloud. Tenkan is above Kijun. Everything looks good on the weekly right now. But it's, maybe, the other thing I would also pay attention to is these prior highs. You can see that one right there in particular, which was 92.86. So let's add that in there and use that as a reference point. So sometimes you'll see a little circle on a candle that represents the high that I'm looking to break through. And we're under that 92.86 level. You can see what happened here. It came close right there to that level and then declined. Okay, came close here. And instead of declining, what it's doing is it's creating what's called a base. right there above the Tenkan. So I just want to see some confirmation. I want to see price getting above that 92.86. Then it makes more sense to me personally. Silver, on the other hand, check this out. Now, this is a perfect example of what you want to see if price breaks through that level. Whoops, let me use a square. Hold on. There we go. Square. Boom. Okay. This happened on Friday. It broke through on that candle, higher volume, and now it's continuing to move up. All right, so that is a very good thing for silver. I like silver. GDXJ is looking pretty good. That's the gold miners, junior gold miners ETF. Copper miners ETF looks bullish. We're in a nice strong uptrend. Not everything is going down. There are things that are strong. GDX looks good. Daily and weekly chart. XLC looks good. That's the communication services. Although this one not as great. I mean, you can see it's flattening out a little bit. On the weekly, on the daily chart, it's holding up above the moving averages, but we're stuck a little bit in the consolidation spot right here. XLY looks pretty good. It did close above the Tenkan right there. Barely, though. Okay, so that's why it's not looking particularly super strong. But on the weekly chart, there it is. It's got to break that 240 level. Currently, I have a lot of gold stocks in the Blue Cloud portfolio for a reason, because gold is doing really well. Okay, and so a lot of the stocks that I recommended and added in the portfolio over last week were gold stocks. So if you want to find out about those, consider becoming a member. I do share all the daily trades that I place with legend level members in posts. So, and again, you can find out about that. And so gold is looking even more bullish, all right, today than it was any day since May. Why? Because it broke 317.60. All right. Here it is. This is last week. This was Friday of last week. Here it is in the daily chart. Look at the volume, guys. They didn't really talk about gold at all, pretty much at all on the show. Did you notice that? So that's also good. You know, that's why us retail traders we're paying attention a little bit better, maybe, right, than the experts. So gold is something I would consider. Gold stocks, XLF, financials, not bad. I mean, it's down 0.74% today. It's above the Tenkan, it's above the Kijun, but the momentum is lost a little bit here. You can see that the ADX is not moving up. See that white line there? All right, so that's what that represents, is momentum is declining. Whereas gold, it's still moving, and it's in the early stages of moving up. So I think this has a lot of potential. I love stocks like this, where they've been in a consolidation stage for a long period of time like this, and we've been waiting and waiting and waiting for that breakout. This is it. Boom. Financials, XLF. Yeah, I just talked about that. IJJ is the mid-cap 400 value ETF, down 0.45%. That a little bit of the loss of momentum right there, but holding up. Okay, so we could get a bounce here. I'm not going to go into the rest of them. I looked at the technicals. They don't look that great for the rest of these ETFs. I mean, they're okay probably for some of them, but no reason to get into those. Let's talk about Next, which is one of the members' requests, and that's Next Decade Corporation. Here is the weekly chart on this one. It pulled back. Okay, last week it was looking pretty strong here. It's still holding up. I mean, it's basically above the Tenkan and Kijun. So on the weekly chart, there's nothing really negative to say here quite yet. On the daily chart, it also, you can see it looks like on Friday it did not break above the top of the cloud. It was under, right? So if you look at the closing price, there's a little box that populates here. See, that says $10.72. That was the closing price on Friday. And if you look at over here, which says Senku Span, look for Senku Span A, which is the light colored blue line. Where is that? It's around this area here. See, it says 1073. See, that means that the price of 1072 closed under that 1073 level. Hence, it was inside the Ichimoku cloud. Hence, you don't really want to be adding a position when you're inside the cloud, right? So today it's down 0.28%. It did gap up and then dropped and closed inside. We've got the faster moving average under the slower one. So look, I mean, there's still support levels here. All right, on the daily chart, you've got the Tenkan-sen, the Kijun-sen. All right, you've got the Senko Span B and the 200, which is rising. This is technically a nice, we've got a higher high here than the prior highs, and a higher low from the prior lows. So we're still technically in a strong uptrend on next. I just wouldn't be adding a new position here. DUOL, Duolingo. Let's look at the weekly chart first. So Duolingo this week just dropped under the cloud. But remember something important, that in order for this to be, we need to wait for that candle to materialize fully. It's a dynamic candle, meaning it has not fully formed. Why? Because it's only Tuesday today, right? And so we'll know what that looks like on Friday. This is a weekly chart. These develop from Monday through Friday. And on Friday afternoon, before the market closed, you'll know exactly where you stand on the weekly chart with Duolingo. It looks, the good news is this, on the weekly chart, as price has been declining, all right, so is the volume. It's not increasing. See that volume? So if it was increasing, that I would be more fearful. The fact that it's slowing down, the volume is slowing down, means that there's not as many people shorting it. Okay, there are less participants in the shorting process here. And not only that, we're coming close to that prior support level of 263.68 based on that weekly candle right there. So you've got support there as well. So 263.68 would be the level I'd be watching. Here's a daily chart under the cloud. So again, I would not be adding this position as a new position. If you happen to be holding on to it, you can determine whether, it's a personal decision you have to make, right? About whether you want to hold it or not. But I'm suggesting that, hey, you've got some support levels here, at least. So that's a good thing. And that's going to do it for this video, folks. Hope you all had a good weekend. It was a long one. And if you want to learn a little bit more about becoming a member, okay, there's going to be a video recording. It's going to pop up in a second. Check it out. And thanks for watching. And don't forget to like, subscribe, and hit that notification bell if you want to make sure you get the notifications at the top here when I do a new video. Thanks. So, you're coming to this channel for the first time. You may not have subscribed yet, which is kind of crazy. Can't believe that you haven't subscribed. This is free. Hit the subscribe button. I'll be popping up in your subscriptions in the future. If you hit the notification bell as well, you will be notified. So, where's the notification bell? Well, once you hit the subscribe button, okay, it will pop up the notification bell, and then you can select that. Another interesting that you'll notice is that you get this little plus button right next to the subscribe. That happens after you've subscribed. Why? Because they're giving you an option now to join. All right. And if you click on subscribe it plus, once again, another thing pops up. And this is the membership. This is where you can support the channel. Okay. You can either become a Blue Cloud supporter, a Blue Cloud trader, where you get access to exclusive member-only videos here under Blue Cloud Trader. Under Blue Cloud Legend level membership, you get those member videos. You can get access to day trading videos as well as the daily trade updates that I post. Now it says here under the community tab, it's not actually under the community tab. It will pop up in this next thing here. Boom. Once you've become a member, you'll see a new tab pop up called membership. You click on that, and that's where you'll find those daily posts on the trades that I've placed. What do I cover in this members only video? Like this one here, for example, that I posted just 21 hours ago on August 8th. I go over the, whoops, hold on one second. Let me go back. You will see exclusive member only video. Okay, weekend update on the trades I placed throughout the week, plus new stock ideas for the upcoming week that are setting up. Okay. And all you need to do is just scroll down. You can see you'll have access to older ones as well. All right, so you get a more insight about my trading strategies and the stocks that I'm actually holding, plus those 20 new stock ideas. All right, something to consider.